Thank you, Tedros, and thank you, Abraham, for the kind words. And thank you for the East Africa Finance Summit for organizing for the 5th time and inviting me for the 3rd time. Today, I would like to take the 10 minutes talking about the opportunities and challenges around uncollateralized digital loans. So the way I see this market is if banks want to grow and expand their services, this is the only hope that I believe that exists from an expansion, profitable segment. So I have organized the presentation around 4 areas. One is what is this market and what are the challenges to capture this market. 2, how do we unlock this challenge? The practices and examples in the different countries. And finally, zooming down to Ethiopia, what I see is at the moment a viable opportunity. So if you look at the market opportunity, at the moment, different publications ascertain these numbers. Again, I'm sure you all have it. Less than 70% of Ethiopians, or 70% do not have access to formal financial services. 15% of households have reportedly borrowed from a financial institution. And 80% of the bank's outstanding loan today sits with 28,000 borrowers. So we have 18 banks, including the Commercial Bank of Ethiopia, that has availed 80% of their private sector finance to 28,000 borrowers. So if you see, there's a huge opportunity between 28,000 and close to at least 3, 5, 6, 10 million viable businesses that exist in Ethiopia in micro, small, and medium enterprises. The World Bank estimates the finance gap today, or the potential, in other words, to be about $5 billion is what Ethiopian MSMEs require from the banking or the financial institution sector. So why are not banks or financial institutions capturing this humongous opportunity? Many studies show that this sector is very profitable, actually more profitable than the large businesses banks lend to today. The biggest challenges is that MSMEs' inability to provide collateral. They simply don't have collateral. They don't have appropriate products that banks offer them. They don't have easy way of applying for, getting access to, and then managing their microcredit or their small loans. And most importantly, equally, banks don't have the technological capability to manage microloans. The current systems that they have is expensive to manage small and microcredit. So in summary, if you look at what are the key constraints in this market is really credit and how we understand credit scoring and solutions that can provide credit scoring. The second thing is customer management applications, technology again, loan management applications, or how do you manage once a small loan gets defaulted? How do you manage it proactively? So it really rotates around technology and the unavailability of technology in different forms in Ethiopia. So this is the major challenge. So before we go into solutions, so to unlock this potential, really we need to understand, I'm not a banker by the way, I come from a technology background, so understanding credit. I think our banks are very focused on one type of credit scoring, and that is collateral. They do a lot of evaluations, analysis, and many things, but at the end of the day, they depend on collateral being availed. So that limits the market potential of how banks can access this new market. So in many countries, collateral is the 5th and last means of guaranteeing a credit that is provided at a small loan level. The first one in many countries uses algorithms around character or around capital, around capacity, around resilience and other conditions. So if you look at those things, None of the banks today or the sector applies the four other areas of credit management or the mitigation of credit. So what do MSMEs require in general? So they require uncollateralized credit. They require a product that are appropriate to their use, their need, their demand, and something that meets their pain. So how do you achieve uncollateralized credit with appropriate products? Rotates around really deploying data analytics, whether it's in the form of statistic or credit scoring. One has to give in to provide and replace collateral. We need to understand that it is not a fast solution that we obtain. A lot of banks are running and buying systems. Systems will not solve this. Automation will not solve this. You need to understand that you need to test, learn, and deploy, test, run, and deploy. And you need to understand your customers at the very least in terms of what do they demand, what do they need, what do they have pains in. Abraham, I think, put a good pain point whereby smallholder farmers cannot access credit while they are a very viable micro and small enterprise. And we need to understand that moving from a collateral-based to uncollateral digital credit that depends on data analytics is a journey. It is not a simple stop of somebody buying a software and thinking they can do it the next day, which a lot of banks seem to have the tendency of doing the past 6 months. So data sources we need to understand are varied. Today, 18 banks have less than 300,000 borrowers. So that data, from a data source perspective, means very, very little. You know, it is irrelevant in data scoring. To properly data score or score credits, you need millions of data. So we need to think about where does those millions of data come. So banks, I urge you not to make the mistake that you can do credit scoring based on your data at your core banking system. So the question for me is, in a country where data is very scarce and where data sharing is almost next to impossible, how do we start? Where do we start? And in many countries, there's an array of things that you can see there. It can be a payment data, e-commerce data, utility data, insurance data, and a health set of data that can be the starting point. So we really need to figure out, where do we start? Where do we start this journey of scoring micro and small enterprises? So just to give you some practices across the globe, and my favorite country is Kenya. So you see a lot of innovations happening across the border. So you see M-Shwari, you see Branch, you see Tala, you see Saida. I can give you 20, 30. But all of them in common have something. They are not banks. They are fintechs. This needs to be very clear to everybody that every successful transition to micro, small, medium enterprises required partnerships between banks, telcos, and fintechs. Each have their own area. So you can see all these companies that I put up there are a partnership between the three major players of the future. And partnership models really vary. So in some instances, the technology and MNO becomes more prominent. In some, it is shared. In some, it is equally distributed. So if you look at each product, an M-Shwari, it is a shared product between NCBA, a bank, a fintech that NCBA owns, and Safaricom. And ownership really goes three ways. Safaricom owns the consumer or the micro small enterprise. The bank owns the loanable fund, and the technology provides the scoring and the ease of managing and applying for the credit. So this three form of partnership is really guided by three things: regulatory frameworks, and really understanding the value of partnership, which in Ethiopia is sometimes very difficult because banks are not challenged enough to find new markets. So I'll close my statement by saying Ethiopia, and I come back to our initiative. I think we have released the first ever AI-powered lending platform in Ethiopia. We have been building it over the last 4.5, 5 years now. We have reached about 880,000 data sets of MSMEs, which we have been tracking over the last 3.5, 4 years. And we are comfortable that our scoring technology is very accurate at the moment. It measures with high accuracy growth, which is really capacity to borrow, and then psychometric, which is ability to pay or willingness to pay. So we measure two things, capacity to borrow and willingness to pay. The other side of the platform does digital lending, which facilitates lending easily for the MSME. It's a mobile-based application. And we have done a lot of exposure because I think it's a journey again, as we said. One of the biggest challenges is knowledge and how you disseminate it and how do people understand and process it. So if you look at, with several banks, we have gone through substantial number of trainings. Some banks, we have been training them for over a year to really transit from collateral-based to uncollateral thinking. It is, you know, for us, the biggest problem was not technology or the products that we developed. It is the change management and the change of the mindset from how do I now believe somebody who does not have a car, a house, a tractor, and say, I can take a psychometric view of that person or a growth view of that person or a capacity view of that person and engage with him. That is where the world is today. And I hope Ethiopia in the next 5 years will get there. Thank you.